This is Cece. Welcome to The Orbit. It is Monday, April 29th, and this is Income from Options Weekly, where we look at the setup for those that sell premium regularly, 0 DTE, 1 DTE, 2 DTE, or weekly premium sales. So we have the market opened higher to start the new week, and that follows a very good last couple of days to last week where the market found its footing and went all the way up to 5,100. We pinned right at 5,100 in the SPX on Friday, and it was as penny as a pin can get. It was within a few pennies of that strike. Now we are hovering just above that strike. And if we back out the chart a little bit, we can see where we've come from. This is the 1 month chart. You see those lows, got a little bit of scare at the beginning of last week, and then finished on the highs of the week. And we are coming into this week with a vol backdrop of about 17 IV. The 0 DTE vol is about, also 17 actually. Think of it this way. We have 17 IV, which for today was 0 DTE. That is not high. That is actually quite low for 0 DTE. Where you look out a day and you have 13 IV, 13 and a half. That is again very low for 2-day IV. And the reason for that is, well, there's a couple of reasons. One is we're just coming out of a weekend and we pinned at 5,100 and we're only up about 0.25% inside the expected move. So there's no real rush for traders to go out and buy options near the money right now. And so that's kind of suppressing vol since Friday. Then you have these first couple of days and the expectation of a lot of traders in the market that maybe these first 2 days are actually quite quiet because Wednesday we have the Fed announcement and the monetary statement and the press conference afterwards. This could be quite volatile. And then you go out into Friday and we've got the non-farm payrolls. So we've got a big 1-2 punch on the economic data front this week, particularly that Wednesday. And you can see the volatility goes from 13 to 17 on Wednesday. So if you are selling vol, if you are buying vol, be very aware of what's going on here. This is an odd curve that is heavily tilted towards Wednesday into Friday being where the most volatility this week could come. And by the way, this is about that on the chart we were talking about that potential for a 50% retracement from this recent sell-off. So the sell-off was about 6%. It took us down to the 49.50 level, and we had sold off from the, sort of the 52.60 level. We are at about, you can see it right here, we are about halfway back. So on the 1 day, going back to the 1 day, we have about 51, let's call it 51.40 to the upside, 5,100 to the downside. So not much room. We're talking, under 20 points in either direction. So you obviously have to be very careful about a move like that. If we went back to 5,100 right now, that is not a big move, and you would be right at your short strike. So if you are, just looking at an iron condor as an example, this is the type of thing where you would want to see a move in the market. This is quite low 0 DTE vol, and maybe the timing of an option sale is very dependent on watching that IV potentially go higher during the day if we saw the market go into the red or back down below 5,100. If it continues higher, you of course have to be very aware of the low volatility you are selling to the upside. Going out to the end of the week, however, looking out to May 3rd, we're down to 50.50 and 51.90 is where the expected move is. We take this a little farther out. We get that short call, let's say up to about, let's go up to like 52.10. And now we're 50.30 on the downside. And if we look at that, that's risking about 350 to make 150. We take out the chart. You can see where that is. It's not quite catching the lows, but it's near that secondary move we made lower last week that then got bought. You're down near there. And you, of course, can move this up and down, play around with it on the Options AI app.